Hello, hello, hello. Welcome to Now Stock Trades. How's everyone doing today? All right, ladies and gentlemen, how you doing, chat? What's going on, everybody? Okay, so in this video, we're going to go ahead and talk about the Root stock. By no means am I endorsing this company or not. I just got a lot of people that were asking me, hey, Al, you mind if you just do an educational kind of overview of the Root stock? And I was like, you know what? I see some potential in this company. I definitely like what I see. And overall, I'm, going to go ahead and do that, right? So, let me just go ahead and I forgot to take this right now. Give me a moment. This will be very useful when we talk about the fundamentals of the company. We'll talk about this right now. But first things first, yeah, guys, look at this. This stock is up 813% year to date. I mean, this stock has literally exploded as an 8-bagger, right? The question is did our stock terminal pick this up? So if you go ahead and look up Root, again, so we integrated about approximately 2.5 billion outputs of institutionally graded data in the stock terminal. So if you go ahead and hit Root up, you get 517 results. And that's going to basically give us our AI analysis, potentially bullseyes or whatever, right? But the main one here is our stock terminal called us out on February 26, 2024, when the price of Root was $20.93. Again, you can't make this up. Again, that's the date. Even tells you the time. Monday, February 16, 9:15 a.m. Okay. So the question is how much has the stock improved since February 26? So you go here, February 26, and here it is right now. So pretty much 320% increase, right? So the question is, or if you really could have calculated the value even more, right? So now the question is all right, fine. The stock terminal called it out. What do I do? Is this a good company? Why is it rising? Right. And that is when we look at kind of doing deep dives and using the technology that we have in our platform. So what I'm going to do is I'm going to do a quick deep dive. Now, very quickly, revenues increasing for Root. Gross margins are 36%. Net income, they recently became profitable on a quarterly basis. So we'll talk about that. I know it says trailing 12 months is 15, but look at free cash flow. Free cash flow went from negative 43 million to 163 million on the trailing 12 months. That is a huge, huge, huge thing, right? So that's pretty good, right? So let's go ahead and look at the Q3 earnings highlight. So profitability achieved. Root reported net income of 23 million this quarter. It's 69 million year over year improvement. Operating income is 34 million, up 68 million year over year. Adjusted EBITDA is 42 million, an increase of 61 million from the previous year. Gross loss ratio, an industry leading 57%, thanks to data-driven underwriting. So you have growth indicators. Overall, there's a huge growth in policies. You can go ahead and read this. I'm not going to go ahead and read it for you. Just reading the numbers here. There's a refinance term loan with BlackRock, reducing 300 million to 200 million while securing 150 million in growth capital. So this improved cost capital by 300 basis points, which is cutting future interest expenses by 50%. Generating 50 million in operating cash flow, reflecting a strong profitability and efficiency. There's a lot of investments in partnerships, and you could go ahead and look at the rest, right? So this is an example of basically how we do our deep dives, right? There are other stocks that we've looked at, and you can look at our reputation speaks for itself, given that what we've done. But overall, they have a 2025 growth plan, which is expand partnerships and geographic footprints, introduce better products and at competitive pricing. And the whole market differentiation here is Root aims to become the largest and most profitable personalized insurer carrier in the United States. So they have a churn is gradually decreasing, particularly among older policies and partnership channels. And the big one here is they turned a major corner, achieving profitability in Q3. Okay. So this is the deep dive right now. So you can see overall net income profitability achieved a quarter-to-date, year-to-date metrics of Q3 GAAP earnings of $1.35 compared to $3.16 last year, and 52 cents negative in the previous quarter. Revenue reached 305.7 million, surpassing expectations of 266.5 million, up from 289.2 million in Q2. So huge thing is expense reduction. Totaling operation expenses dropped to 271.3 million, showing them overall operating efficiencies of the company. We talked about the debt refinancing with BlackRock decreasing its expenses, interest rates for around 50%. Increased cash position from 850 million to 954 million year to date. Again, beautiful part is our due diligence speaks for itself. These are the deep dives, and we essentially try to teach people how to essentially become a multimillionaire in the market, because you got to know these numbers. Most people just go ahead buy a stock because their neighbor told them, right? So you can go ahead, look at the rest of this due diligence here. And you can go ahead and read the rest of this. The big thing here is the revenue and net income and free cash flow growth rate. Now, you're only going to find this in our platform because, unfortunately, so the cool part is our platform goes and shows you what the analysts are expecting. Now, unfortunately, you go to Yahoo Finance or whatever, they're only going to give you potentially up to 2025. We have the revenue and net income estimates of analysts all the way up until 2027. So we could go ahead and do an analysis, do an estimation of future free cash flow, right? So revenue from 2024, 2025, they're expecting to do 1.14 to 1.24 billion. From 2025, 2026, they're expecting 1.4 billion. Now, again, here's the thing. Very quickly, that's a 13.38% increase in revenue. But here's the thing. These are analyst estimates, so they could be wrong. And obviously, just like we saw in the previous report here, revenue reached 305.7 million, surpassing expectations of 266.5 million. That's a huge gap, right? That's a huge gap. So obviously, analysts may be getting it wrong, and they need to adjust their analyst estimation. So by far means, I think this is pretty conservative, okay? So 2026, 2027, the revenue grew at 1.45 billion. It's going to get smaller and smaller as we project more further out. Net income negative on 2024, 2025, but here's the beautiful part. 2025 to 2026, you're going to see a dramatic increase in net income profitability, which is why this company is exploding, and it's probably going to be exploding even more. 2026, 2027, you got net income surging again to 42.62 million, a growth rate of 110.3% from the last year. So the overall growth for net income is literally 684.77%. Huge, huge. So we go ahead and normally right now, if you were to look at this table and look at the overall revenue of $1 billion, and you take free cash flow here and take 163 divided by $1 billion, you get ultimately a standard assumption of 15.6% of the revenue translates into future free cash flow. So if we were to take the overall revenue growth rates that analysts expect, these are what we're going to be expecting in terms of free cash flow. 2024, 177, 2025, 193, 2026, 218 million, 2027, 226 million. Okay. So when we do that, we go ahead and, here's the overall intrinsic value breakdown, but I can just show you. If we go ahead and take the overall growth rate in terms of the revenue, estimation, which we got from, give me a moment. Un momento, we got 28.06 here from our calculation. We go and put that, and we get a recession of $224 all the way up to a bull of $908.92. So obviously, huge upside for the company, considering it's trading right now at around $95. Okay. But here's the thing, we like to always be conservative. So let's say they don't grow at 28%. We did 15%. 15%, you get a recession of 106 to a bull case of 356. So obviously, definitely upside there. This is going to be kind of a very conservative case. We're going to have them grow at 0%. Imagine if they don't grow. Obviously, this is a lie. They're growing. But if they don't grow, what is the base value? Well, you have a recession of $49 and a bull case of $120. And it's currently trading at the base case at 0% growth rate at $92.67. So this is pretty good. This is pretty big here, right? There's a lot of potential. Now imagine if you were, on the stock terminal and understood how to do these calculations, you would have found this company at $20, right? And if you would have done the calculation, looked at overall where it was going, in calculating the overall free cash flow, because it's probably transcended up quarter over quarter basis. In fact, let's just very quickly open up a terminal here and just out of curiosity, let's go ahead and open up the help menu. And again, this is part of our stock terminal. This has over 2.5 billion outputs of institutionally graded data. There's nowhere on the market where you can get this lifetime access. For folks that want to get lifetime access, we are having a Black Friday expiring soon coupon code that gives you $750 off, one-time payment, lifetime access, and the product speaks for itself. We have over more than $55.3 million in overall net worth combined with a 30% self-survey response rate. So we have multiple millionaires here, and you can go ahead and look at our past, and our basically product speaks for itself. So if you want to change your life, and if you want to go from zero to hero, look no further. Okay, so Let's go ahead quickly and let's look at stock fundamental analysis. Actually, no. Let's go to stock fundamentals real quick, and we'll go ahead and click on. Let's do quarterly cash flow results, and let's look at Root real quick. We'll go ahead and do that, and instantaneously we get results and directly SEC links to the final link to the filing here. So no stone is left unturned. You are in control of your destiny here, okay? So we'll go ahead and take a look at Root. This is for Q1. I'm curious. Free cash flow was $12 million of free cash flow for Q1 of this year, right? Now, Q2 of this year, free cash flow was 59 million. 59 million. Ladies and gentlemen, you know, when was this? This was literally, I mean, this is just insane, right? So just imagine you got the signal here on February 26th. Then you go in and do your due diligence, and then you look at the free cash flow and the overall trend rate. Obviously, very clear. In fact, let's just go back up here and let's look up the quarterly results for Root. But this time, let's go further. Let's do, I don't know, let's do 10. Let's see Root from back in the day. Okay. So here's 2022. They were free cash flow negative. Let's see when they turned positive. That's on a quarterly basis. See, but it's getting smaller. Negative 13 million here from like literally negative 8. So, sure, the next one probably. We'll see. There it is. Next one, 12.6 million. So check this out. It just shows you the power. And obviously our stock terminal called it out by then. So 2023, September, it was free cash flow positive. Okay. And you could see the big decrease, right? Negative 13. And then before that was negative 86. Reminds you of Tesla almost, right? So there it is. So let's look up September 30th, 2023. September 30th, 2023. There it is. It was trading at $7.88. $7.88. We got a positive free cash flow of this company, and for 12.6 million. Okay. Now the question is, what was the revenue? So let's put this number here. So 2023, what quarter is this? 2023 Q3. So it's all threes here, right? We got, what was it? 12 point what? 12.6 milli. 12.6 milli. Okay. Now let's go ahead and take a look at the one moment. Let's go back up to these commands and let's look up the net income quarterly results for Root. We'll do 15. No, yeah. So if you look at it, I was actually looking at 2023, right? 2023 is when we got the thing. So this is 2024. What is this? Oh, whoops. Hello. Got the wrong one here. So let's go amount. Let's do 15. So now what I want is Q3. So here's Q3. Q3 and the revenue was 115 million. So watch this. So all you got to do is take 12.6 divided by 115 million. What does that give you? We'll just do it on Google because you can see it. 115 million. So that gave you, multiplied by 100%, that gave you pretty much 11% of revenue goes to free cash flow. Okay. Now, if you knew this company, let's go ahead and divide by 100% so we can get the decimal places. So we could do, 0.1095. Okay. And at the time in 2023, they had 14 million shares. Okay. So we go ahead, open up the intrinsic value calculation real quick. Okay. Let me double check. 14 million shares. So we'll just put 14 million here. 14 million shares. The free cash flow was 12.6 milli. Okay. And you look at the revenue here real quick. The revenue from a year went from a 311 to 455. So 2022 was 311. and then 455 for 2023. And I'm sure the analyst estimates were there too. Growing at 46%, go 10 years into the future. Look at that. See that? This is just you using 1/4 of information of free cash flow. That's it. It's called a quarter analysis. It's very conservative. Growing at the 46% growth rate. And look at that. The stock was trading at September 30th. September 30th. 788. The stock was trading at 788. $7.88. You could have made right here, and the stock went up to the bear case. So you could see, even with this calculation, we still have a lot to ride with root. So here's the thing. So if you would have bought it again, our stock terminal called it out at 20. If this was on your radar, and I think it called it out even before then, because it has 527 results. If you go ahead and search for it, there's 517 results, and we are on page. So you can see we're on page 13. It did call it out in 2023. I'm just showing you an example of a call out this year, because then it goes back to 2023. But overall, you can see from Q2, you found that from Q3, you found it became free cash flow positive. Okay. It became free cash flow positive, right? And then you were able to back calculate the revenue, and you're able to see a price target that's very high. Back in September 30th, it was $7.88. So this is the power of fundamental analysis. Are you starting to see how you can easily become a millionaire? So let's say, for example, you put in $10,000, right? You put in $10,000 at, let's say, 780, 788. You have around 1,000 shares. This thing went up. It's $95 now. You just took $10,000 and turned it into $120,000. Okay, that's pretty much a 12x gain, right? 12x. You put in $100,000, you would have 1.2 million. The point that I'm trying to tell you is there's opportunities everywhere in the market. The beautiful part is our stock terminal picks up these opportunities. That's how we were able to, our stock terminal pick up soon. If you would have taken advantage of that, you would have been up 319%. We were focused on Clover Health because I think there's still gas in the tank here. 251%. In fact, you go look up images, you see us, right? So the point that I'm basically trying to say is that this intrinsic value calculation, the reason why you haven't heard about it is because it works. They don't want you to know about this. They don't want you to know that there's a mathematical way of calculating a company. And if you were to go back to Q3 of 2023, hold on. Yeah. Q3. If you go back to Q3 of 2023, you would have figured out it became free cash flow positive. It's starting its free cash flow positive descent. And then you literally went up. If you would have figured this out, let's open up Root real quick. At 788, you go here at 788. Where the hell did it go? September 30th. And you go up until now. That's a 10 bagger, all the way up to a freaking 12 bagger. Are you seeing this? Are you seeing the power of the intrinsic value? So again, if you want to get out of this rat race, if you want to essentially get to a level where you're in control, where you don't have to answer to anyone, only the Lord himself. Our platform speaks for itself. We have lifetime access, one-time payment, and you get access to all the data and to all of our deep dives. You can see these deep dives are pretty damn good. Okay, these deep dives, these papers will make you millions of dollars. Okay, so there it is, and potentially, if they even go better, this thing can go up even higher, right? So as of right now, if I were to assign a price target on this company conservatively, I would say 250. I would say 250 is pretty good. 250 for the next 5 years, probably going to be able to attain this quickly, right? But I would say 250 is good. And in fact, you can see what other analysts are doing. So in our stock terminal, you know how there's tip ranks and stuff? Well, you don't have to get that because it's an all-in-one platform. You go ahead and look at price target consensus. You could see one price target high is 234, right? So you could see it's on top of it, right? Our platform is on top of it, right? So yeah, from September 30, 2023, you're saying it was from $9 to $10. Well, here's the thing. If you actually go to Root in September 2023, Where the hell is it? Oh, I'm doing 2022. Whoopsies. Okay, my bad. Now I get it. I'm sorry, guys. I'm sorry. Where the hell is September? September 30th. There it is. So excuse my language. It was $9.51. So you go back here, you replace this, $9.51. And then you would have made a still pretty significant. I mean, yeah, I was just my bad. I mixed the you know what but you know what this tells you? It shows the markets on top of it because watch this. It was trading at $5 and all of a sudden became free cash flow positive on a quarterly basis. In September is when it became free cash flow positive, and they were assuming that, and then boom, it went up there. So that makes sense. That makes sense. Here's September 30th. Where the hell is it? There it is. So you got up here and all the way to peak. Yeah, 10 bagger, 9 to 10 bag. And it actually went back to 7. So stupid. It actually went back to $7.58. People are selling. Freaking stupid. Right. And then this obviously now back to 11 bagger. Yeah. So my apologies. I was using 2022 numbers. So instead of a 755 or whatever, it's $9. Call it 10. Right. But again, still a lot of money. I mean, this thing's basically predicting. We used the Q3 numbers, and this thing is predicting a bull case target. I just was looking at 2022 because I saw 2023, and I'm looking here. Who's here? My bad, guys. But yeah, but still $7.55 versus 9, couple dollars up, but still, just like you said, lots of money. Lots of freaking money. It's insane. Okay. So that's what it is, guys. So if you want to break out of the cycle, we have a bunch of deep dives that we released. A lot of stock picks that we have, again, not financial advice, just just from an educational perspective on how to evaluate a company. Oh my God, I have so much to tell you guys. I was just talking to folks about the stock market. It's just there's a lot of folks that are just uneducated. And you're just going to get a lot of suckers that come in every year. I mean, Wall Street calls them suckers, right? And it's a shame because all they need to do is educate themselves, right? You don't have to be a sucker. Okay. I used to be a sucker. Okay. I used to be a big sucker, right? And it's unfortunate, right? You work your ass off your whole life. You're a pencil pusher. You're always, you're always a good person, right? You're always trying to do things the right way. And all of a sudden you look around you and people that have connections and just have just a better life circumstance, but the cards they've been dealt with, they've always seemed to always go higher than you, always get promoted, always this. But I'm here to tell you, sadly, that's never going to change, right? They're always going to get promoted higher than you if you don't have the connections. That's life, right? But fortunately, there is a way out. There is a way out, and it's through analyzing, doing value type investing, right? There is a way out of this hell, and I found it, and I'm here to share it with you guys. And I wish I can give this platform a lot cheaper, but the thing is, the data is expensive. The data is expensive, right? It is expensive data, and you can speak to all the people on the lifetime access. You see the value. In fact, if I were have to say, what we're selling is actually undervalued. If you want access to this type of research without any type of deep dives or any other things, you would pay $2,000 a month for Bloomberg Terminal Access, right? Which is insane, right? Our platform is literally one-time payment. And for all of our Canadian and American future members, you can use a firm, which you can basically finance that option. Because the beautiful part is we have something on the FU money side that we call out are using covered calls and cash secured puts. We look at technical analysis, fundamental analysis, the wheel strategy. We look at all different types of approaches here, okay? Because at the end of the day, it's about taking you from zero to hero. At the end of the day, it's creating a community of like-minded people so we can all soar together. Because what I have, and I'm not trying to create a sense of urgency, but this is the reality. This is the reality. If you were to have purchased Amazon back in the 90s, you would basically, you would be so freaking wealthy. What we're experiencing now is we're experiencing another quantum leap in life. First, we had the Henry Ford. Then we had the internet phase, which is Amazon, and the computer phase, which Amazon took advantage of. Now we're into the artificial intelligence phase. And it's companies like, for example, Palantir that we called out. It's at $70 now, right? And it's about to approach Dan Ives' price target. In fact, if you were to look at our price target for Palantir, we called this out around $6.55. In fact, let me go ahead and just since we're on the page here, one moment, let me just figure this out. Okay. Here's a video of us calling Palantir on January 15, 2023. You can look at the video. Okay. Now I want you to look at January 15, and it's up 844% at a $65 price. Let's look at January 15 now on Palantir and see where we're at. January 15, 2023. 2023, Jan 15. Jan 15, 2023, right here. It's up 900%. 9-bagger. So you can see our due diligence and our research speaks for itself. Now, I like the setup in the back, but I'm currently traveling a lot right now, interviews and whatnot, so it's very difficult, right? But you can see the power of what we're doing here. Okay. But the point is we are in an era of AI boom where this is the new era, guys. We're here. Okay. We're here. Look at Clove. We are here. We're in an era of artificial intelligence. Okay. And it's the companies that use AI are going to be the ones that replace the companies that don't. Okay. And this is why there's a sense of urgency, because I think after this next bull market, maybe 1 to 2 more bull markets after this, I honestly don't think there's going to be a chance for the middle class to be able to get into the rich class. I really don't think there'll be a quantum leap in capital, only if there's recessions. But even then, you still need a platform to help navigate those recessions so you can see which companies to invest in, because you have to calculate the value of the company. But this is, I think, after the next 1 to 2 more bull market cycles, it's going to be very hard, because now you're going to have AI running everything, right? AI is going to be running the trading desks. There's really not going to be a lot of opportunities anymore in the market, because you're going to get into central intelligence where everything's going to be run perfectly to a point where there's going to be universal income, right? And unfortunately, it's going to be the poor people that are going to get the universal income. So the question is, a lot of folks are going to lose their jobs. People that are working baristas, people that are working in McDonald's, and all these jobs are about to be replaced. And there's going to be a sense of universal income. And the sad part is, people like us, we're going to be owning the products of the labor of the AI machines that are going to revolutionize this endeavor, while the people that are going to be on the lower class are going to be the recipients of the universal income, which is like Social Security. It's literally nothing. Okay. You're going to be on the poverty line. So this is why there's a sense of urgency for folks to join in right now, because, I'm telling you, it's this gap between the haves and have-nots of society, the gaps between the bourgeoisie and the proletariats, the rich and the poor. I think it's just going to get worse. I think this gap is going to get worse. And if those people are going to be rowing the boat, and they're going to unfortunately be kicked off of the boat because the robot's going to take over. What I'm basically saying is, this is an opportunity for you guys to own the boat, to own the next generation, so essentially to own the next fourth industrial revolution. That's what we're going to right now. So that's getting off my soap opera box. If you're watching this 10 years from now, it's probably too late, and I'm sorry, right? But for folks that are watching now, congratulations, right? This is why we had to make this channel to help, because there's going to be huge gap in disparities. If doctors in primary care, especially all doctors that are practicing social determinants of health type medicine and evidence-based medicine, if you think the inequalities and healthcare disparities exist now, AI will help alleviate them. But I'm telling you right now, in terms of the other gaps and financial gaps, and I think those gaps are going to be widening in terms of how much people can make. So you guys got to wake up and smell reality. This opportunity comes every 25, 30 years, and we're about to enter the biggest bull market cycles for AI. So it's already starting. You're already starting to see NVIDIA at a $3 trillion You know, I mean, like Wall Street's pretty much moved their money, and we called that out. If you go to alstocktrades.com, we talked about Nvidia when it was trading at a $17 basis, pre-adjusted, pre the stock split, right? But you know, you could see, you know, Nvidia is $3.4 trillion. You know, people used to make fun of these projections, saying AI is going to be 16 to, you know, to 15, you know, $1 trillion in movement. And people used to make fun of folks that used to say, you know, Tesla is going to be $2-3 trillion. Like, no way. But look at Nvidia. Nvidia is 3.4 trillion, right? So, you know, we're starting to see Wall Street maneuver their assets into these companies that are building the next fourth industrial revolution. And what's going to come out of these chips is going to come out data centers, and those data centers are going to feed the robots. They're going to eventually take a lot of people's jobs. So, you know, once you get to that position where you do have a couple $1 million, 5 to 10 to $15 million, then you'll be able to make what 3, 4, 5% off of that, and then you can get into real estate and be the be the owners of labor, right? So you know, it's so that's, I think, where we're headed. Okay, so guys, I love each and every one of you. God bless you, and I hope to see you on the Lifetime Access platform. You know, that's all I have for you, and I hope this video was of your liking. Please hit the subscribe and like, as it helps with the YouTube algorithm, and I will see you on the next one.